to have our lender partner come in. His name is Dean. We're going to be answering all of your real estate questions. So if you have any questions about FHA loans, conventional loans, bank statement loans, what the market's like right now, just let me know. I'd love to be a resource for you guys and answer any questions that you may have. I am located in Southern California, but if you are anywhere else in the United States and you just want some questions answered for your real estate journey, I'd be more than happy to be a resource for you. So let's get started. Just waiting on my lender partner. Hey, Teresa, how are you? If you have any questions, please let me know, okay? Today, I'm answering all of your real estate questions, and we're going to have a home buyer's presentation in the end. So if you want to know how to buy a home, you have any questions about that, maybe someone you know is looking to buy a home, you could send this to them. Hey, YouTube, how are you guys today? Let me get my lender in here. All right, guys. I am going to invite the lender. First, I need to figure out, how do you invite people on here? Go live with guests. Okay. Hey, YouTube, can I buy a home with no credit? That's a good question. So do you have low credit, or you just have not started building any credit at all? AOC, AO City Boy, let me know, okay? Dean, we actually have a question. Someone is asking if they can buy a property with no credit, Dean.
Yes, you can. And hi, guys. My name is Dean. Work closely with Eva, the best agent in the world.
Thank you so much, Dean.
Guys, of course. So, guys, yes, there is a program, and yes, you don't need to show income. But what we do need and require is to have a big asset.
Okay.
So we want to make sure you have assets, and then we can utilize that. So big down payment.
So AO City Boy, what he's saying is that you can buy a house with no credit. You just need to have assets. So that would, what would some forms of assets be that would be good for them to use for this purchase?
Yeah, so anything that you can liquidate it, such as, let's say a house, you can get a HELOC or just equity out of that. Let's say hard cash, so if you just have assets in the bank, anything that's liquidated, to be honest.
Okay.
If you can liquidate it, we can utilize it.
If you can liquidate it, you can utilize it. So if you have hard money, if you have a house that you want to use already, for other people who own homes currently and would like to buy another home, we have a program called DSCR, where you can use your current home to basically finance the next purchase. Can you tell us a little bit more about how that works, Dean? Uh-oh, hold on, we lost the lender for a second, guys.
Okay.
All right, you're back. You're back. So we got about 15 people here in the YouTube. I'm live on YouTube as well. So guys, let me show you my lender's information. If you guys are looking for someone who can get you approved, low credit, no credit, haven't paid your taxes in 2 years, maybe your work history's been a little funny, Dean is an amazing lender. Okay, take a screenshot of this because he is going to be able to get you pre-approved. All right, guys?
Yeah, and we can, so here's the thing about, can you guys hear me?
Yes, we can hear you.
A little connection.
Can you hear
so
us?
There is a no income program.
Okay.
There is a no income program. So now what that means is you do have to put 20 to 25% down, right? And we would use your assets as a configuration as to what you can get approved for.
Okay. And no problem, Jesus. Like my live. Let's get some engagement going.
Yeah.
So what were you saying about being able to use the home as basically?
Yeah.
Go ahead.
Eva?
Yeah, can you hear me?
Oh, sorry. Okay, so let me do something really quick. Yeah, let me do something.
Okay, guys. The lender, we're having some technical difficulties, guys, but if you could just ask your questions in the comments by the time he comes back, we'll have a couple more questions for him to answer. So if you have any questions about
Yeah.
what interest rates are, how much you can be pre-approved for based off how much money you make, um, off of how much debt you are. Let's hear some scenarios. We love when people give us their real life scenarios and we're able to kind of pre-qualify you on the spot. So give us a couple scenarios to run, guys. We want to help as many people as we can achieve home ownership. And so, yeah, please engage, like this live. If you're not looking for a home, send it to somebody who need me some approved air fryer recipes. Ooh, see, I am a certified big back, and I do not use the air fryer that much besides like cooking salmon and chicken. So I am not really a good person to ask about this. I'm a real chef, okay? Young hoes love an air
Chef and a
fryer.
realtor.
Young hoes love an air fryer. I'm just kidding, guys. If you use your air fryer, that's good. It's a healthy alternative. Um, all right. Does anyone have any questions for us? We have a lender on live with us. His name is Dean. He's a great lender.
Hey,
He
guys.
can answer any questions that you have about buying, refinancing, hard money loans, investing. We do these lives every day so that we can help people achieve home ownership. Maybe you need to sell, invest. We're here to answer
Yeah, and
all
get
of your
resources.
questions. Yes, we are a free resource.
Yeah, and then Eva, I wanted to go back. So now my connection is good. It's showing me full bars.
Okay.
So there is a no income program, right? And the first one being is going to be the asset lab. What we do is we ask for 25% down. After we ask for 25% down, the remaining capital that you have, right? You have to show 12 months of reserves, and then we'll get you approved. And these do come with higher rates. Guys, the less information you give to the bank, the higher your rate is going to be because they have to mitigate risk on their end. Now, there's another program. It's called debt servicing coverage ratio. It's exactly what Eva was talking about. Now, it's all in the name. We use the cash flow that the house produces in comparison to what your mortgage payment will be. Now, if that will suffice, meaning it's a 1-to-1 ratio, if it's $5,000 that it produces and the mortgage is $5,000, the bank will loan it. Now, let's say you are just cash flow positive. Let's say the house produces $6,000, but you actually make a payment of $5,000, which gives you $1,000 to be in your pocket. Also known as cash flow. You're going to have better rates. Now, we also have a no ratio program, right? What that means is you do not need to be 1-to-1. You don't need to produce 5,000 for the mortgage, or you don't need to produce 5,000 to withstand the $5,000 mortgage. It could be lower, but you're going to have a higher rate.
Okay. All right. And this is for all the people who currently own a home and are trying to buy another one. Maybe you'd like to utilize the home that you currently have to leverage what you're able to afford with your next purchase. This is why it's great to have a lender like Dean. A lot of other lenders, like banks, kind of don't do stuff like this. So it's amazing to have Dean. Yes, Dean is the GOAT when it comes to mortgages, loan, any type of finances. This is the guy to go to. Okay.
Much love, much love. No, but guys, we need to do this, right? And I wanted to talk about this. I was talking to another agent about this, but realistically, this live is so that we can hear your scenarios out. We don't want to meet you in person. We do, but that's not the goal for this, right? We want to give you.
We do want to meet you in person, okay? Just so you know, we do want to meet you in person.
The thing for the reason behind what we're doing here is not to say, hey, we want your money, or hey, we want to meet you so that we can take your money. No. If you don't want to work with us, that's fine. But at least ask us questions so that you can structure yourself. Because it takes time for people to set up consultations on one-on-ones, but we're giving the one-on-one consultation publicly. So utilize the time that we have, because realistically, there is a lot of powerful tools that we have.
It is true. And for the first person to get pre-approved through this live with Dean, whether you're coming from YouTube, TikTok, Instagram, anywhere that you're coming from, we are giving $100 Zelle, Apple Cash, Cash App, Venmo to the first person who gets pre-approved through Dean. Not only do you get $100 for working with us, but we're also covering your appraisal, which can be anywhere from $600 to $800, and we're covering your home inspection, which could be anywhere from $400 to $600. So just right off the top, working with us, you're going to keep in your pocket $1,300. So That's a plus. A lot of loan people don't offer a free appraisal. We've had people who join our live and said that they've had to pay $800 for an appraisal. So we take care of that. We try to do what we can to keep money in our clients' pockets. For instance, I am continuously getting my clients' closing costs covered. So that right there saves you anywhere from twenty to $40,000. So that's the type of savings that you get when you work with a professional like Dean and myself. We're able to save our clients way more money than other people. Do you guys have any questions for us? We'd love to answer some of your questions, scenarios, or I can just hop into explaining loan programs and the home buying 101 process.
Yeah, guys. And I'm an advocate for what Eva's saying. Eva is she is not all talk. She actually does what she does. There's actually some things that she doesn't mention here that she actually does behind the scenes. She makes sure that you guys get your due diligence period covered, right? If there's unnecessary things, right? A lot of people say, why do I need mold inspections? Why do I need this inspection? She's willing to kill the deal so that you can get a house that's 100% up to date.
Yes.
Unlike anyone else.
Yeah, we've actually dealt with situations where we had an inspection with a client. Well, first off, right off the bat, we went in and there was a cockroach on the countertop in the kitchen. So that kind of already just showed me how that day was about to go. But we found moisture in four different parts of the house. Underneath the crawl space, there was literally a pipe that led to nothing. So when dirty water flushed, it would just go right into the crawl space. So I'm not afraid to tell my clients, hey, this is not a good house for you. I've done it several times where I'll tell my client, hey, I don't think that you should proceed with this house because I don't look at my clients as just another number or just somebody. Like I look at them like my family. So just know that when you work with me, when you work with Dean, you're getting treated like a family member. Okay, guys?
Yeah. If we wouldn't do it, we won't offer it.
Basically. Do you mind talking a little bit about I-10 3.5%?
Yes. Yeah, let's talk. You know what? That's a good topic. Let's talk about. I just signed up with this new bank on Thursday of last week. Let me tell you the programs that they offer. So the first program that they offer is, of course, a 3.5% I-10. What that basically means is you have to come out of pocket 3.5% as a down payment. It plays the same role as an FHA, so you're gonna particularly cover the FHA guidelines. Okay. The only thing that changes is you do have to have at least a 620 credit score. Okay. Now, another thing too that's changing is it's a 40-year loan. It's not a 30-year, it's a 40-year loan, which means your payments will be lower. Now, this is a lease option to own type of product. It's not, directly a lease option to own, but it plays the same role. Okay. Now, the only caveat here is you do take title as a 50% owner with the Mojave Indian tribes. The Mojave Indians are the ones that had created this program for ITIN members because not a lot of ITIN members do. Like ITINs are pretty much non-U.S. citizens. They don't have the structure that a U.S. citizen has, right? They don't have the same types of tools that we have, the benefits. Mm-hmm. So they offer this 3.5% program. You're going to share title 50-50. The only caveat is I believe like a percent or 2% is going to go towards the Mojave Indians, which means if you pay $5,000, they'll probably take like $100 to put in their pocket every time they collect. Now, what they're doing is putting their name on the title on the loan, right? They're getting approved, in other words, but using your income. So they're putting their name on the loan, but we're going to be using your income.
Okay.
And yeah.
We have a question here from AO City Boy, and this is a great question. We'd like for all of you guys to engage. So, can we talk about the home buyer's contract? My sister, who's also a real estate agent, is in a 30-year contract buying her home. Am I obligated to sign up for that long or to just start buying a home? So I think what he's asking is, are 30 years fixed mortgages the absolute only thing that someone could use? I think that's what you're saying, AO City Boy. Is that what you're saying? Are you asking about a 30-year mortgage? We'll wait for him to respond, but you can go ahead, Dean. I think that's kind of what he's talking about, a 30-year fixed.
Yeah.
Oh, yeah.
So
that's what he's talking about.
You can go up to 40 years.
Okay.
Yeah, so you can go up to 40 years. What was his question again? I lost the context.
The question was that can we talk about mortgages? Like, what is the length someone can have for a mortgage? So he's saying that his sister bought a house and she's in a 30-year mortgage. Is that the end all be all, or are there other short-term mortgage plans that someone could utilize?
Yeah, so that is typically the most traditional route you take, the 30-year mortgage, right? The 30-year fixed, that is the correct traditional route. Now, we did make up the 40-year mortgage, and that leads to lower monthly payments, which leads to more affordability. But in the long run, if you're doing your payment schedule and you're adding it up to like 360 months, which is 30 years, you're going to see that you're going to be paying a lot more of interest on the 40-year mortgage as you are with the 30-year, right? And then you can kind of make the same conception with a 15-year mortgage. So as you go down on the amortizations, you're going to have you're going to save a lot of money, but your payments are going to be a lot. As you go more deeper into the longevity of mortgages, let's say a 40-year, you're going to have affordable monthly payments a lot cheaper, but you are going to be paying a lot more in 40 years than you are in 30 years, right?
Okay.
So it really depends what do you want to accomplish? Do you want to accomplish a monthly budget, or do you want to accomplish, how can I save the most money in a 20 or 15, 30-year, 15-year span?
Okay. So Ayo City Boy on YouTube. Basically, it just depends on what works best for you. With a 30-year mortgage, you're going to probably pay a little bit less in interest than you are going to pay with a 40-year mortgage versus a 15-year mortgage. So it's basically the longer that your mortgage is extended for, the more you're going to pay on interest, correct? But you'll have a lower monthly. Is that correct?
That is correct.
Okay. Okay, so it all just depends on you. And also, I wanted to ask if you wanted to pay your mortgage off quicker, like say that I did get a 30-year mortgage, but I would like to have it paid off in 15 years, how much extra a month would I need to be putting towards my mortgage for that?
Yeah, so typically you want to just pay more, right? So if your payment's $5,000 and you make a payment of like $6,000, that's going to save you a lot of money, right? Because it just shrinks the amortization. When I say amortization, guys, it means the last day, right? The last year of the last day, which means at the end of the loan, your loan fully amortizes, meaning you have no more loan. So from you making those extra $1,000 payments, you reduce that 30-year to, let's say, you shrink it down to like a 25-year, right?
Okay.
And you can save a tremendous amount of money. I'm talking thousands of dollars just for making that payment, right? So what your interest rate does is every time you make a payment, I'd say 65% of that is going towards interest. The remaining is going towards, taxes, home insurance, and then it's going toward your principal. Your principal typically has the less of everything.
Right.
So you're getting an interest. You're basically getting charged an interest every month on the remaining balance. So as your principal feeds in to the remaining balance, your balance goes down, and you're just tackling on an interest rate. And that's how an amortization works. So the moment that you pay more, you're lowering down that remaining balance, which means you're saving more money in the long run.
Okay, so guys, if you can just put a little bit extra month towards your mortgage and you'll have it paid off way sooner than you would if you just paid the minimum. It's kind of like a credit card. If you just pay the minimum due, you're going to get hit with more interest and fees and all that mess. So if you have it to do it, it would be probably beneficial for you to just start putting that to it, pay your house off quicker, or even if you just have more equity to put towards the next purchase that you make. Can I just take 800,000 saved cash and buy a home? Yes, you can.
Yeah, 100%.
Those are actually the easiest transactions. Sometimes they can be done as quick as 7 to 10 days. So if you're a cash buyer, you have a lot more leverage with pricing, getting a deep discount, how fast you can close. So if you are a cash buyer, please contact me and we can set something up, okay? Here's my information for YouTube. So please do give me a call. Here's Dean's information. So you guys want to take a screenshot of that. He is a great lender. We've been working together for years at this point, and he will never lead you wrong, okay? You could call him at 10 o'clock at night. He'll answer the phone. So AO City Boy, please contact me. My number is 747-250-2395. Let's get you in a house. What makes you think that they wouldn't allow cash these days? It is a little stricter because now they want to track where the money's coming from. Dean, can you kind of elaborate how that works cash with cash purchases and how the how escrow looks at it and does their tracking to where the money came from?
Yeah, so typically when you're doing cash, even we probably don't even ask, right? We don't even ask where that money came from because it's all cash. So we don't really check bank statements. There's really no need for a lender or a bank to be coinciding with this transaction.
Right.
The only time that we do have to basically come into the picture is if you're getting a loan, right? And in the loan process, we ask for your 2 months of bank statements. If we see something in there that shows a large deposit, we're going to question it, right? Because the bank, what they do is we have to verify these assets. If it's just a random deposit that came in, let's just say of $60,000, and let's just say, right, the bank thinks the worst. Let's just keep that a buck. They think the worst. They think that you borrowed it and that you have to repay that back. So now the money that you're putting down towards the mortgage for the down payment, the bank thinks that you're going to have to repay that back. So they want to verify it. They want to paper trail it. They might even ask for a gift letter attached to that deposit, right? So the only way that you can get away from that is if you season. You have to season those funds for 2 months because I only want to see 2 months. Okay. So let's say you made a deposit on month 1, you have to wait till month 3, and then you give me the last 2 months of your bank statements, and it won't show. It'll show as if you had it in there. So that's the loophole. You just have to season it in there for 2 months.
So if you have cash, put it in the bank account, let it stay there for about 2 months, and then in that time, we can still be looking at houses. We can go search for things, but we just need that cash to be aging a little bit in your bank account beforehand. So, if you have it stored under your mattress or in a closet somewhere, put it into the bank, let it mature a little bit, and that way you can use it to your next purchase. Okay, guys? Do you guys have any other questions for the lender? I'm not going to be on here too long, guys. I have to go to a home inspection where we're going to see if anything's wrong with the home and drooling over here. Oh my goodness. We're going to see if anything's wrong with the home and all that stuff. So, yeah, we're only going to be on here for probably like another 30 minutes, guys. So, hey, Ezard White, if you have any questions, let us know. And also, if you guys can like this live, that'd be very helpful. And if you know anyone who's looking to buy a home, sell a home, maybe they've thought about if they could even qualify for it. So send this live to them. We love to reach as many people as we can to try to help everyone. We're here to be a free resource to the community. So if you or anyone that you know is interested in buying a home, we might be the ones that will be able to help them out.
Yep.
All right, guys. So we're gonna talk about some loan products. Okay, so hold on one second.
Oh, Eva, you know what? I wanted to talk about something.
Yes, sir.
So that bank that I signed up with on Thursday, guys, I'm a broker, so I sign up with multiple banks, okay? And multiple banks, I mean wholesale banks, so not your retail, not the ones that you can just walk in, get a loan, or open up a bank account. I talk to banks that are not advertised to the public, and the main reason I signed up with this specific bank is because they have a 3.5% BOE. What that means is if we cannot show stubs because we lost it or something, or we just can't retrieve them for some reason, or we don't have a W-2. Well, if you have an uncle, right? If you work with your uncle, or you work with someone that's a relative to you, all we're gonna do is just send a piece of paper that they fill out saying how much you make. Okay, then we're gonna take that for face value and not ask any questions. Okay, if you guys can piece the puzzle together, great. If not, DM us. We'll talk more into detail.
Yes.
But we can definitely utilize this program to get you guys a house. Of course, right? It has to be real. It has to be real. So, right. That's what I wanted to put forward. And you guys just need at least a 580 credit score as well. 600 to be safe.
Okay. Well, let's get to our favorite part of the day. We're going to talk about home buying. I'm going to be super quick with this because I really do have to go, but I want to be able to talk about this really quickly with everyone. So, YouTube, can you see this or is it backwards? Let me know if I need to flip this around, okay? So, turn that way. All right. Is this good? Hold on one second, Dean. All right. Can we all see it? All right. So welcome to Home Buying 101. This is something that Dean and I like to do, where we talk about the home buying process. So if you guys have any questions while we're going over this, please do feel free to ask them. So the first step of this process, oh, y'all still twisting Zaw for the WNBA game. I don't know what that means.
You saying, are you guys rolling something up for the WNBA games?
I don't watch sports, so I will not be. But go sports, okay? Go sports. What about you, D? You gonna be twisting up some Zaza for the WNBA?
I don't do Zaza.
Oh yeah, I forgot you don't. He's gonna crack open a beer, guys. Okay, we're gonna crack open a beer and watch some women toss a ball. Alrighty, Cash, ask some real questions, okay? So step one of buying a home is obviously, here's the most important thing that we're kind of doing right now with Dean, but you need to get pre-approved by a lender. And once again, I'm just going to reiterate that if you work with us, we're giving $100 to whoever gets pre-approved through Dean from this live. Just contact him and hold on a second. A bunch of bullshit or something that makes no sense. Okay. Anyways, all right. So we're gonna go ahead and get started.
Is that from YouTube?
Yes. Be nice on YouTube or you will get blocked, okay? So we're gonna go ahead and do step one. We're getting pre-approved by a lender. And these are the types of loan products that we have available. There's qualified and non-qualified mortgages. Stands as a qualified mortgage would be something that you typically see like a FHA, conventional, a VA loan. These are like the umbrella of the normal kind of loans that you see on like a daily basis in real estate. FHA loans are government-backed loans, and the pros to this loan is that you don't need a very high credit score. They've actually just released a program where you can get an FHA loan with a 540 credit score, right, Dean?
Yeah, so with conventionals, we do ask for like at least a 600, a 620 to be specific.
Right.
When it comes to the non-QM, specifically, if you have like a 500 credit score, we can get away with that. But it'll be a non-QM space.
Okay, but for the FHA, the lowest they could go is 540, correct?
No, FHA is 580.
580. Okay, which one is the one with 540?
It's 550. 550 and 500. That's for conventional.
For conventional, okay.
Yeah.
Well, also the other pro is that you only have to put 3.5% down. Now, the cons of this is that you are going to have something called primary mortgage insurance for the life of this loan. That's kind of just the way that the bank is able to protect themselves when giving this loan out because, it's a little bit easier to get into it. So that's kind of the way that they protect themselves. With conventional loans, this is what Dean was talking about. These are the bank-backed loans. The pros of this is that if you find something 500K and under, you can use 3% down, which is even lower than FHA. So that's great. The PMI can be removed on a conventional loan after you hit 20% equity. And you can put down as low as 5% on stuff that's over 500,000. So people typically think that with conventional loans you have to put down 20%. That's just not the case. Correct, Dean? Let me know if you want to add anything in here that I'm missing. Okay.
That is 100% correct. You're hitting everything by the nail. Now, guys, FHA, right? Typically they have lower interest rates, but you pay more with an FHA loan as you would with a conventional loan, okay? So don't get it misconstrued. Don't be rate driven and not know the monthly payments, okay? Because you have to know exactly what those payments would be like in order for you to make that educational decision, okay?
Right. Okay. So the cons of the conventional loan is that you have to have a slightly higher credit score than you would typically with an FHA loan. There are harder debt to income requirements as well. So basically, if you have a lot of debt, then this might not be for you because it will definitely kind of manipulate or mess with how much you'll be able to afford. So Thank you guys for all the likes. Please continue to like this live and send it to anybody you know who's looking to purchase a home, okay? And follow Dean. Follow Dean the lender, okay, guys? Make sure you go hit
I need to
him.
show my face, guys. You guys help me out.
We need him to hit at least 1,000 followers so that we can see his beautiful little face. All right, next program, we're going to talk about VA loans. Now, what is exactly something that they would need for this VA loan? Now, obviously it's for our service members, but what documentation would they need, Dean, so that they can use this?
So what we would need is your COE, your certification of eligibility to show your entitlement, right? So a lot of people know VAs as pretty much 0% down, which is absolutely true, but we would have to check using your COE. Right. Second, if you're in active duty, you don't need this. But if you've been discharged, we need your DD-214. It's a discharge letter to show that you've been discharged out of the active service, and now you're pretty much now living a good life, right? You're living in the real world. You're just out there trying to buy a house. So we're gonna need a DD-214. We also would need a disability letter, right, to show basically you're awarded for anything that you have. Let's just say, right, in active duty, you've been disabled for some reason. We need at least a score of a 10% or higher. Okay, that would ultimately get you exempt from the upfront mortgage insurance premium. Now, a good base to think of is with VA loans, you do not have mortgage insurance. Okay,
that's awesome.
So it's always a plus, and you do need a 580 credit score.
Okay, so if you are a veteran, we're going to need your COE and your DD-214. Is that what you called it?
Yes, DD-214,
DD-214 and COE.
And your disability letter.
And your disability letter if you have it. Also, if you are active in the service and you would like to buy a home, you can use this. So please, if you're a veteran, contact us. Here is my information on TikTok and on YouTube. This is my information. If you contact me, I can get you connected to the lender, okay? So that is VA loans. The cons to a VA loan, though, there's not many, but there are cons to everything in life. But the cons are that the property must meet a certain condition requirement from them to fund, and the appraisal process is a lot stricter. Dean, are we able to work with our appraiser, or is that something that the bank will send?
Yeah, I mean, so typically we're not allowed to choose appraisers, but when you're with the right team, we can get you pretty much in-house service. So
yes,
we'll make sure that you guys are taken care of.
And remember, guys, if you are working with us, we're covering that appraisal, so that's saving you $600 to $800 right off the bat. We're also going to cover your home inspection. That's another $400 to $600. And whoever gets pre-approved through this live, we're giving them $100. So if you connect with Dean, or if you connect with me and you get pre-approved through Dean, we will Zelle you, Cash App you, whatever your preferred form of payment is. Okay. All right. So next we have our non-qualified mortgages. Okay. Thank you, Derek, for all of these likes. You're awesome. Thank you so much. We've got 1K likes, Dean. Oh my gosh. All right. Yes, going up. And anybody from YouTube, if you guys have any questions, I know there's a couple of you in here. Please like this live. Send it to anyone who you may know who's interested in buying a home. We're trying to help as many people as we can, okay? So next we're going to get into our non-qualified mortgage loans. Now, I know it sounds like a bad thing. Oh, it's not qualified. How is that going to work? Well, it just means that you don't fit under the traditional umbrella that maybe a W-2 worker does. Non-qualified mortgages are for our content creators like myself, who not only do I do real estate, but I also post videos online. So a lot of people think that if you do that, it might be harder for you to get a home. No, you can actually get one quite easily. For our nail techs, hairstylists, barbers, maybe you're self-employed. We've had people with waterproofing companies, steel fabrication companies, all different types of businesses use these type of loans. So there's different types. You can use a bank statement where they'll go off 12 to 24 months of your bank statements. There's profit and loss ones that you can do if you're a business owner. I-10 for our people who might not have a social, but you still do pay taxes. We can get you in a property for as low as 3.5% down. That one kind of is like a rent to own situation because the Mojave Desert Indians will be on title until it's completely paid off. But if you just need to get into a home and you don't have 15 to 20% down, it's a great option for you. Let me see if anyone said anything. Okay. Awesome. We touched on this earlier, but DSCR, this is for if you have a home already and you would like to leverage that home to purchase another home, this is a great option for you. Do you want to touch on any of these real quick, Dean, before we move on?
You're nailing them. I mean, look, the details behind it, guys, are so like they're really good, right? It's just good stuff that you guys need to know because what we're doing this for is so you guys can understand the concept with each product. It's not so much that you understand it and do it on yourself, but so that you understand it, right? Because you're gonna $1 million is one of the biggest purchases in one's life, so you need to know exactly what type of loans these are.
Yes.
DSCR though, like you were saying, we use the cash flow purpose from what that house can produce. It's not so much about going through your income, but what we do is look at your credit score. Okay, so no debts. People use DSCRs because they have too much debts, and that would pretty much jeopardize their chances of getting approved the traditional route. So they made the DSCR.
Yes. So the pros for the non-QM loans is, like we were saying earlier, this is the best option for self-employed borrowers. You can get qualified without using your tax returns. The cons are is that typically there's a higher down payment and more conditions may be needed by the bank. So you might have to give reasons why maybe there was a gap in employment history or, why, you know, there's a number of things that they could ask for, but just be prepared if you're using this kind of loan that could happen. But when you're working with someone like Dean, who's professional and prompt, he'll get you over those hiccups with no problem.
I appreciate that.
No.
Likewise with Eva. Likewise with Eva. That's why we make a good team.
We do. We've been working together for years now, so you're in good hands with both of us, okay?
Yeah.
So after we have gotten you pre-approved and we know how much you can afford, you're comfortable with your mortgage amount, we're gonna go do some shopping, okay? This is the fun part. This is where me and you, we're gonna meet up. I'll bring you some coffee. We're gonna go see a bunch of homes. After we get the pre-approval from Dean, you're gonna sit down with me. We're gonna go over your wants and your needs. You're gonna let me know the timeline of when you need to move. You're gonna let me know what type of home are you looking for? Are you looking for a single family home, a townhouse, a condo, a triplex, a fourplex? What are your goals with this home? Do you want to use this home to maximize your return on investment? Maybe rent it out for some Airbnb money? Let me know so that I can only send you what fits into what you're looking for, okay? We need to know the size, the location, if you have kids, the school districts, home features. Do you want something more turnkey or do you want a fixer-upper? These are all things that are not only going to avoid me sending you things that you might not be interested in, but it just makes the search a lot easier, okay? All right. Any questions so far, guys, from the lab? Do you guys kind of understand everything that we're talking about? If you want me to go over something again, please do drop it in the comments, okay?
Hey guys, any scenarios too? Like, you guys are anonymous, right? So
yeah,
that we can know who you are. Just give us a scenario.
Let us know what your credit score is, how much you make. Hey, Derek, do you have any questions for us? If you want to drop your scenario in there so we can answer for you, let us know. Okay. So after we go shopping for a home, say that we've seen about 5 to 7 homes, and you say, Eva, this is the one for me. Awesome. What I'm going to do next is I'm going to go to my office. I'm going to get some comps for you. I'm going to go over all the homes that have sold in the area lately just to make sure that the offer that we're writing is fair and you're not overpaying for a home. We're going to see what do you want anything that comes with the home? Some people sell their home with all their furniture. Some people want to take everything. Maybe you want the cat that we saw in the backyard. Everything is negotiable in real estate. So we will write up that offer and I will always ask for closing costs to be covered for my clients, especially in this market where it is a buyer's market. So that can save anyone anywhere from $20,000 to $40,000. Just right there, getting that negotiated by your realtor. I want the cat. Sometimes I do too. I can't lie. That's my favorite part is the little pets that come with the house. So we can ask for that. We can ask for that cat. So when we send over the offer, I'm going to keep you in the loop of when the listing side gets back to us. Sometimes the offer is accepted right off the back how we write it. Sometimes they want to counter us where they might say, okay, we'll need a little bit longer to move out, or no, you can't have my cat. I love that cat. So those are just things that we will go back and forth with, negotiating, hopefully getting all of your closing costs covered so you can save that money. Have more money in your pocket to go do renovations, maybe go on a vacation after you close and celebrate. Whatever you'd like to do, we just try to keep as much money in our clients' pockets as we can. Once we have all come to agreeable terms, how much extra is the cat? Everything's negotiable. Maybe we could get it with the purchase of the house, so we'll see.
Yeah, sometimes guys even vehicles are part of the purchase.
Oh yeah, that's happened before. Definitely, like where people even sell vehicles with the purchase of the house. I have a client right now. They're getting a $4,000 fully solid wood table with it. Why would I need to renovate a new home? Well, I mean, some people buy homes that are fixer uppers, so sometimes they're turnkey and ready to go, sometimes they're not. You might want to put your touch onto it. Okay, so after we make an offer, everyone comes to an agreement. We're going to open escrow. Now, escrow is the process where you're going to have to definitely be in on the journey with us now, because now you have 3 days to wire over something called an earnest money deposit. It could be anywhere from 1 to 3% of the purchase price, but typically it is 3%. So that needs to be wired within 3 business days of opening escrow. And this is akin to like a security deposit for an apartment. It's basically showing the sellers that we have skin in the game, that we're serious. It's going to allow us access to the property to do our investigations, like our home inspection, sewer inspection, mold inspection, termite and pest. These are all things that I recommend to my clients to get when we are in escrow, just so that you can make sure that everything with the home is as is, and if you do not like something in it, then you can go ahead and pull out and get your money back. Skin in the game. Well, when you're dealing with a real estate transaction, you want to know that both sides are serious. You want to know that the sellers want to know that the buyer who is coming and doing all the stuff in their home is serious, and obviously you want to lock down the home. So that's where that deposit comes into play. You're on the journey with me. Yeah, so as I was saying, that's where the earnest money deposit comes in. It's fully refundable, okay, guys? So if we come into anything during the appraisal, the inspections, or the loan aspect of it, we can get your money back. But this is money that's held in escrow, so it's not held by the seller, it's held in a neutral third party escrow company that can transfer it back to you if we need to cancel the deal. You bringing skin into it. I don't know what you want. Can you ask real questions, please? All right. So after we have done our inspections, this is when I was talking about the general home inspection. An inspection company is going to check it from the roof to the crawl space. They're going to go over the walls with the moisture reader, make sure that there is no leaks in it, all that good stuff. All right. Next thing that's going to happen is if you're working with Dean or any other lender, they're going to send out an appraiser to do an appraisal on the home. And this is just to make sure that the home comes back at value of what you're paying for it. Because just because you like it and you want to offer 1.9, if everything else in the area is selling for 1.5, the bank is just not going to fund 1.9. And you might have to come with that other amount on your own to get it. So that kind of kills deals sometimes. So this is exactly why in the beginning we do our comps. We're making sure that we're not overpaying for a house. All that good stuff that, you know, you need a realtor to help you out with this, because there's a lot of people who overpay and overspend in real estate trying to do it themselves. Next thing is the final loan approval. This is basically the bank saying, hey, you are approved for the amount that you asked for, and congratulations, we're going to give it to you. Next, after that, we know that we're heading straight to closing. Closing is when you're like just a week away from getting your keys and you're becoming a homeowner, okay? So 5 days before we close, we're going to do this thing called a final walkthrough. Now, this is your last chance before we close to make sure that any of the repairs that needed to be made have been made. If we negotiated any credits that needed to be given to us that we got that negotiated. Maybe you asked for the washer and the dryer. We need to make sure that those appliances are still there. We've actually had cases where the sellers take something that the buyer has asked for in the contract. So this is our last little line of defense to make sure that everything as is and that you're still in love with the home. After that's all said and done, we'll send you a verification of property for you to sign. You're going to be in contact with your lender because they're going to connect you with a notary who's going to come through and have you sign all of those loan docs that the bank approved you for. And then we're going to go ahead and send over the final funds. Now, we put in our earnest money deposit. So if we're doing a conventional loan and we need to put down 5%, you just need to send over the additional 2%. And that's that from you. Once the loan has been funded from the bank and they've received your down payment amount, then we're just going to wait for title to record, and that typically takes a day. And that same day, you get your keys, and congratulations, you're the newest homeowner in Southern California. When do you actually test the HVAC? During the home inspection period, that's when they will test the HVAC, and if something's wrong with it, they're going to let us know. If anything comes up in the home inspection, the home inspector will let us know, and from there we can call out the qualified vendors, whether it be the HVAC person, whether it be plumbing, electrical, maybe a pool guy or chimney inspector. This is when we're doing all of that during this escrow period, during our inspection period. And then do we sign you off to a home warranty company? Yes, so I always ask for home warranty when I write an offer. I ask for the seller to pay for a year of home warranty for you. So if anything happens when you're in the home, because this typically always happens, you move in, something ends up breaking or what have you. You can call the home warranty company. I think you put down $200 and they'll send someone out to check it out, and then they'll fix it. They'll cover the repairs and all of that. When does it happen? For the home warranty, we ask for that in the offer. So by the time escrow closes, you'll have your home warranty coverage that we buy for you in your name. And also, Spilby, I'm going to follow you, okay? So if you have any other questions or you want to connect with us, this is my number at the top. This is Dean's number at the bottom. For anyone on YouTube, this is my contact information over here. So please, guys, don't hesitate to contact us, okay?
Yeah, guys, and ask questions.
Yeah, ask us some questions. But unfortunately, I have to go to a home inspection right now, and it's about 30 minutes away, guys. So I'm gonna have to cut this short today. But Dean, thank you so much for being here with us. Guys, thank you for all the likes. We got to 2.4K likes. That's amazing. Thank you guys. All right, well, we will see you tomorrow, okay? Me and Dean will be back to discuss more loan programs. And if you have any questions, please feel free to hit us up.
Yep. All right, Eva. Have a wonderful
All right, guys. Have a good one. Bye-bye.
All right, chat. Take care.
All right, YouTube. Bye.